The stock market can seem like a complicated world, but it's easier to understand than you might think. Think of it as a giant marketplace where you can buy and sell pieces of companies called stocks. When you buy a stock, you're essentially buying a small ownership stake in that company. The stock market plays a crucial role in our economy. It provides companies with capital to grow their businesses and create jobs. For investors, it offers a way to potentially grow their wealth over time. Whether you're a seasoned investor or just starting, understanding the stock market is essential for making informed financial decisions. The stock market operates through a network of exchanges, such as the New York Stock Exchange and the Nasdaq. Companies list their stocks on these exchanges, making them available for investors to buy and sell. The price of a stock fluctuates throughout the trading day based on supply and demand. When more people want to buy a stock, the price goes up. Conversely, when more people want to sell, the price goes down. Think of it like an auction. Buyers place bids on the price they're willing to pay, and sellers set asking prices. When a bid and an ask price match, a trade occurs. This constant buying and selling activity determines the stock's market value at any given time. The stock market is a dynamic and ever-changing environment, influenced by various factors such as economic news, company performance, and investor sentiment. People invest in the stock market for various reasons, but the primary motivation is the potential for financial gain. Stocks have the ability to generate returns that outpace traditional savings accounts or bonds. This potential for higher returns stems from the fact that investors are essentially participating in the growth and profitability of the companies they invest in. When a company performs well, its stock price tends to rise, allowing investors to sell their shares at a profit. Investing in the stock market is not just about making a quick buck. It's a long-term game that requires patience, discipline, and a solid understanding of the risks involved. Section 4. Navigating the stock market. Waters, risks, and rewards. While the stock market offers the potential for significant rewards, it's crucial to remember that investing always involves risks. Stock prices can be volatile, meaning they can go up and down in value quickly and unexpectedly. Various factors can influence these fluctuations, including economic downturns, geopolitical events, and industry-specific challenges. It's essential to approach stock market investing with a realistic mindset, understanding that losses are a possibility. Diversification, which involves spreading your investments across different asset classes and industries, is a common risk management strategy. By diversifying your portfolio, you can potentially mitigate losses from any single investment. Section 5. Starting your stock market journey. Tips for beginners. For those new to the stock market, getting started can feel overwhelming. Here are some simple tips to help you begin your investing journey. First, educate yourself. Take the time to learn about the basics of investing, different investment strategies, and the companies you're considering. Second, start small. You don't need a large sum of money to begin investing. Many brokerage accounts allow you to start with a small initial investment. Third, invest for the long term. The stock market is not a get-rich-quick scheme. Approach investing with a long-term perspective, focusing on steady growth over time. Finally, consider a financial advisor. If you're unsure where to start or need personalized guidance, consider consulting with a financial advisor. Remember that investing is a marathon, not a sprint. Patience, discipline, and continuous learning are key to navigating the stock market successfully. Section 6. Understanding the basics, your foundation for success. Understanding the fundamentals of the stock market is essential for anyone looking to grow their wealth and achieve their financial goals. By grasping the concepts of stock ownership, market mechanics, and risk management, you can make more informed investment decisions. Remember, investing in the stock market is a journey that requires continuous learning and adaptation. Stay informed, seek guidance when needed, and never stop educating yourself about the ever-evolving world of finance. With a solid foundation in stock market basics, you can confidently navigate this exciting and potentially rewarding realm. Thanks for watching, and remember to like, share, and subscribe to the channel.